Welcome to Venture in the South. These are the stories of innovation and success in the southern U.S. that make money, have fun, and do good.
Welcome back to Venture in the South, a podcast about angel investing in the southeastern United States. On this week's episode, I'm your host, Paul, and I'm here with two of our VentureSouth group leaders who represent what VentureSouth does in two of the communities we operate in the Southeast. Later on in the show, you'll hear from Thome, who is our representative in Charleston. But we're going to kick things off by introducing you to Jay Shaffer, who is the VentureSouth representative in Chattanooga, amongst many other things. Wanted to give you the chance to meet Jay and learn a bit about his story in angel investing. So Jay, welcome to the show.
Thanks, Paul. Looking forward to the conversation.
Great. Let's start things off with a quick, easy one. Can you just tell listeners a little bit about your background and what brought you eventually to Chattanooga?
Okay. Well, the relevant part of my background is I was in Silicon Valley working for Sun Microsystems during the 1990s. Anyone that's old enough to remember Sun Microsystems, it's kind of like working for Google, grew from $1 billion to $20 billion during the 90s. And I was fortunate to, looking back on that, I was very fortunate to work there for 14 years in 7 different jobs and 6 different business units. So it was a great opportunity to learn. Got a transfer to Atlanta before the Olympics in 1996, continued working for Sun until 2006, and then started a startup company and worked in 3 others until November of 2019.
Okay, interesting. So lots of different areas of experience there at Sun. Was that because you couldn't figure out what you liked doing, or they couldn't find a team you could work with, or what?
A little bit of both. I think that career planning is an oxymoron. So opportunities came up and they sounded like they were good opportunities. And I moved around to different business units. I was there when Sun started 2 business units, the professional services group. And also, if anybody's old enough to remember, AOL, Netscape, Sun. It wasn't a merger. It was just a joint venture, a confederation of companies decided to work together. So got a taste of a startup, but in a big company, it's a lot different than when you're putting your money in to that. So I learned very quickly the difference between a big company startup and your own startup.
And so then you decided to migrate to doing your own startup. So can you tell us a little bit about some of those?
Sure. Well, the first startup, we built a great product. We just didn't realize how hard it was. It was a recordable music box. So it's the gift for anyone who you don't know what to get. So it was an Evite front end, voice-enabled, web-enabled voicemail in the middle, and then had a things remembered type of checkout. So you could send an invitation to anyone, anywhere in the world to record a message for birthday, anniversary, graduation. You create a playlist of messages and music, which you could share on social media, which was Facebook and Twitter at that point, or you could download to a keepsake box. So imagine your loved one lifting the lid of a keepsake box and hearing voices from all family and friends. We executed, we just didn't realize how hard it was. I tell folks we learned what addressable and total addressable market meant because there were lots of people giving gifts. It was just really hard to find that. It was great. And then from there, went to work in a couple of other startups. The last one was VC backed and has some connections with some folks on the podcast and spent a year there. So it's November 2019, trying to figure out what I want to do when I grow up. I knew some folks at Atlanta Tech Angels who had helped us in the last startup. They advised I come to a couple of meetings, led to a position on the board. And I said, where do you need the most help? They said, screening startups. I already know a bunch of founders. November 2019, I started talking to investors. And if you recall, by March of 2020, everything had moved to Zoom.
Yeah, that was a change in experience there over 3 months. So what was it that made you want to start doing that work with ATA in 2019?
Well, after 4 startups, I was basically unemployable. I don't think any big company would hire me. And then I am probably too tired to work in the startups at the rate that we were doing before. So angel investing was a way to stay close to the startups. And maybe we had so many people help us in the startups that we were in Atlanta. And so I kind of returned the favor. And so I just started speaking to investors and learning about the deals. And I would print out deals and highlight all the terms I didn't understand, and the pages were yellow. So that's how I started.
I like that messaging. Are you too tired to work at a startup? Are you too unemployable to work for a big company? Well, why don't you become an angel investor? We should use that on the VentureSouth marketing side. Okay, so you started some work with ATA doing the screening, then there was a move to Zoom, and you moved out of Atlanta fairly
Correct.
soon into COVID, right? Moved to
a year into COVID. So After Zoom, everything went to Zoom, we realized we don't have to fight Atlanta traffic every day. And so we were looking around. Our daughter had gone to college on the West Coast, so part of it was a lifestyle change as well. And we moved to downtown Chattanooga, where we could walk lots of places, growing tech community, easy to get to the outdoors. And the traffic, as long as you stay off a couple of the interstates, it's not anything like Atlanta. So that was delighted with our move.
Okay, good. I was going to ask if you regret doing that, but it sounds like not.
Yeah. And the other part of it is we're looking for a growing tech community, and there's a little bit of it here. I'm still on the Atlanta Tech Angels board and still work on this, co-lead the screening committee. And so there's companies that I would send to Atlanta Tech Angels. And now I'm thankful for the opportunity to start a chapter here in Chattanooga for VentureSouth.
Yeah, great. We'll talk about why VentureSouth likes being in Chattanooga in a minute, but maybe just to recap your work then at ATA. So you currently co-lead the screening, so you're responsible for triaging all the incoming deal flow and figuring out which ones you want to spend time on.
Correct. On the ATA has an online application, which is good because members can refer companies to there. It's a 30 or so questionnaire. We're continually tweaking and fine tuning. We get a chance to look at companies on a similar score ranking. And the other news is because it's online, we get Eastern European refrigerator manufacturers that apply. That's not a fit for us. We have to sort those out as well. But the way that ATA works is the second Thursday of the month is the screening. Of all the applications, 20 or so each month, we invite 5 to come to the screening committee on the second Thursday. The people on the call at the screening committee select the 2 that will present at the member meeting, which is the fourth Tuesday. So you've now been onboarded to ATA, second Thursday and fourth Tuesday.
Yeah, great.
That's
Thank
it.
you.
That's the onboarding that you get.
Yeah, and you also do some work with the analyst program, which is something we admire at VentureSouth, the way that ATA uses some really high caliber analysts to help them on the diligence. Is that your area of remit too?
So that kind of falls under the career planning being, I see more on. There's somebody who had led that analyst program for a while. He asked me if I'd be interested to help. Looking back, it was a great opportunity because ATA is fortunate to attract really bright MBA students and even JD students from Emory and Georgia Tech and other schools around the Southeast. And it was a crash course for me to try and keep ahead of those students. The analysts help with in between the screening meeting and the member meeting. Anybody can say anything during a screening meeting. The analysts help us just verify some of the statements that the founders make during the screening meeting and also identify areas that we'll need to look at deeper if we go into diligence. It could be the IP or competition or things like that. So the analysts get a great opportunity. They help us. The founders are less guarded with students than they might be with investors. And then nobody comes to the screening meeting to the member meeting to hear me talk. The analysts get to stand up and field the questions and from the members as well. So it's just been a great opportunity that looking back at November 2019, I didn't think I would enjoy it as much as I do.
Yeah, great. Listened to a few of the presentations from the analysts, and they are a smart bunch that do a really good job. So that's a very strong tool for doing diligence.
No, I agree. The analysts think that they learn from me, but it's the opposite from them. They teach me all the time. So it's a great learning experience.
Good. And then when you were in Chattanooga, it was, I think, your idea to launch a VentureSouth group there. So can you give us a little bit of a sense for the rationale for why that came about?
Well, Chattanooga there's a lot of companies here. There's a lot of people who've been here for many generations. And there's also an influx of people like myself who moved here in the last few years. And just when I moved here, I would ask people, just trying to familiarize myself. There was Angel Group. We did that a few years ago. It doesn't work. And I dug a little deeper, and it turns out it was all volunteer. When I had crossed paths with VentureSouth before, with ATA, we shared diligence on some deals. I think we met before this opportunity ever came to move to Chattanooga. And when that came, the opportunity said, we can get some folks together in Chattanooga. We could use the VentureSouth infrastructure in place. So on day one, we'll have companies in screening, companies in diligence, follow-on companies, all the education. That's great because Atlanta Tech Angels, it's a great organization, but it's all volunteer. And as anybody that's worked in a volunteer organization works, you lurch from volunteer to volunteer. So it's nice to just plug into the VentureSouth network.
It can be hard to continue the continuity when people are all volunteers. So some full-time team is, we think, a helpful thing to bring to the table. So we're glad to do that and glad to work with people in different towns. Yeah, glad to work with people in different towns that help.
I was going to say, with a foot in each camp, I can definitely tell the difference between a professional organization and one that's all volunteer.
Okay, so what is it on the angel investing side that keeps you involved 5 years after you started? What do you like about it the most?
Well, it's great to be uh, in around the startup founders. It's great to keep up with new technology and evolving business models. But being around founders, they want to put a dent in the universe. And I just think their energy is contagious. So I love being around founders. I love seeing if there's ways that we can help set expectations for the founders, point them in the right directions, or make connections.
Yeah, certainly the most inspiring part of the job is working with people who are seeking to change the world for the better, and sometimes being able to do that. So I definitely agree with you.
And the other thing too is just tapping into the VentureSouth network. So my counterparts, you're going to have Eric after this, Eric and Matt and Malay when I first started, and other market leaders as well, just been so helpful. And if I have a question or have a suggestion, they will run it by. So it's great for my counterparts as market leaders and also just other investors. I'm thinking people in Charlotte or Virginia or North Carolina, South Carolina, folks I could reach out to if I have a specific question. And that's part, when you're working on the marketing team for VentureSouth, that's tapping into the investor network as well as the founder network is very important too.
Definitely agree with that. We say that's our biggest asset at VentureSouth. The 500 members, the part of the group, and their collective brain power and expertise is something that we leverage all the time. But it's not all great being an angel investor. What's the flip side of that question? What do you dislike the most about it?
Well, there's always a risk of bad actors. There's some folks that I've come across in my career at ATA and here in VentureSouth, and you just want to make sure that you stay away from those folks. Also, setting expectations. Sometimes the founders think, oh, I've got an idea. This is worth $50 million. And anybody that's seen my social media, I saw that quote by John Doerr, the VC at Kleiner Perkins. Ideas are easy. Execution is everything. It takes a team to win. And that's kind of business haiku that resonated with me. And I will meet with founders and I'll just say that's great. You have an idea. If you don't have any customers, you have a hobby, not a business. So it's really important to execute.
Yes, there's a lot of mutual education from all directions between investors and entrepreneurs and more experienced entrepreneurs to try to help us all do a better job.
The odds are stacked against the startups. And for investors, they think they'll write one check and become a millionaire. It doesn't work that way. I think when you asked me the question before, what I like about this is working in a startup's really, really hard. It's a contact sport. Angel investing is a contact sport too. So you can't just sit, unless you figured it out, you can't sit back and twiddle your thumbs and just wait for it's all outgo so far from me. You can't just twiddle your thumbs and wait for the income.
Yeah, right. So the expectations between the founders and investors are both need to align and perhaps modify a bit. Startups are hard. I definitely agree with that. And the timing is very important on when you start engaging with them. On the investor side, particularly, have you found it easy to find new potential angel investors in Chattanooga? Or what overall is your experience about getting new people involved in angel investing?
Well, I think the best plan is not to have any expectations when I talk with somebody. Because there were some folks that I knew that we were social friends and we had just never talked about it. And then once they learned what we do in the Kenya meeting, I think they signed up right after the meeting. I didn't think they'd be interested, but you don't know. Then there's other folks who you think this would be a good fit for them and they just don't want to join or for whatever reason still need to see. I think the most important thing is this is something that's going to want to do this because it is an opportunity to roll up your sleeves and dig in and get to meet with the founders and learn about the new technologies and different business models. If that doesn't work for you, the fund might be an option. That way you can just parlay the diligence of the other 500 members that do the diligence.
Yeah, we do find that it's impossible to predict whether somebody's going to like this or not, or whether they're actually going to join the group after coming to a meeting or not. And even once they've done that, whether they are actually going to jump in feet first and make some investments or not. So I agree with you. That's hard to predict.
That's one of the things that I'm excited about the Vicinity and VentureSouth partnership, because Chattanooga doesn't have as many high-tech, high-growth companies here. I've seen a few of them. I think we've had 3 or 4 companies get to the batter's box, but none of them gotten to the network yet. But there are a number of other companies that might be good fit for Vicinity. And so the Vicinity is more of an on-ramp until I can find the sophisticated or seasoned investors who want to join at the VentureSouth level. We can get some people to crowdfund and maybe move up to the VentureSouth group as we know it now.
Yeah, we're excited about that partnership too. You don't think about communities like Greenville or Chattanooga as being hotbeds of tech investing or tech companies, but they are hotbeds of creativity and entrepreneurship and people that want to support those communities. If you widen the aperture a bit about the types of companies and deals you look at, then there's more than enough opportunity there to make some real progress. So we're excited about that too.
And you mentioned before the timing, Paul, and that's one of the things in my experience with ATA. Sometimes the companies come to us, it's too early. They don't have any customers yet, or we get them when it's too late. They've grown too big, their valuation's too high, that the members don't have an appetite for investing at that level. So that's why we want to keep in relationship with the founders along their journey and see if we can get the groups that run on a monthly calendar. Sometimes intriguing companies come up kind of out of cycle. So you want to make sure that you can get them and still hit with their fundraising timetable.
Yeah, right. Do you like doing this in person more than through Zoom, or are you okay angel investing virtually?
I guess I only had 3 months before we went to Zoom, and those experiences weren't as good as they were during COVID and beyond. You'd meet at a law firm in the middle of Buckhead, and not everybody could fit into the room, and it was just really hard. I remember they were trying to send a doodle poll around to see when they could have a conference call after a meeting. That was the old way of doing it. And now the fact that we can have calls on Zoom and record the calls for those who couldn't attend it and then watch the video, I think that's just become the new standard. We did do an investing during COVID, and I joked with these two founders. I said the only thing we're on the call with them for hours. The only thing I don't know was which one of them was taller, because you just see him from ear to ear. We finally got to meet him in person. I was like, "You're taller."
Got it. Yeah. No, that can be it can be hard to develop the kind of rapport and relationships you want to try to do with the entrepreneurs. That's the only part about the virtual side that I really I'm not comfortable with yet. But obviously, a lot of the meetings you can do virtually, so that has definitely improved as those have become a common tool. And so back onto your trying to loop your experience back into angel investing, I guess, given that your background was in a big tech company and several startups, it wasn't a heroic transition for you to move from that into angel investing. But do you use the skills you had in those two environments to help you judge or evaluate the companies you look at, or is it actually not that helpful?
Well, looking back at it now, I think that the experience I got over my career has been invaluable to help at this point. It's surprising how things that I might have learned at jobs even before Sun will come into play here. I spent time at a money center bank in New York, and my first job out of college last century was working on oil rigs in the Gulf of Mexico. And one of the first companies that presented, they had an unbreakable device that they were going to put in the field. And having worked in the oil field, seeing lots of things that were unbreakable end up in pieces. So
Yeah.
when a founder says something's unbreakable, I know better than to trust their word.
Okay, that's a very practical piece of experience you've got there. That's interesting. So, what were you doing on an oil rig?
Well, my first job out of school was working for a company called Schlumberger. It goes by SLB now. Schlumberger invented the industry of at different times when they drill an oil well, they put electronic tools down the borehole, thousands of feet below ground. And we used to joke that we made squiggly lines on graph paper and sold it to oil companies for lots of money.
Okay.
So that was part of it. That's where they help detect where the sands and the shales and the salt water are in the well. I worked on the part that's called completion. Once they had a commercially viable deposit, they would go in there, and you may have heard the term, they would put cement in the hole to put it in place, and then perforate, which means blow holes in the side so that the oil could flow up to the surface. So I don't keep it on my LinkedIn profile, but I had a blaster's license in the state of Louisiana
Wow.
for a while. So to handle explosives, yes.
You learn something new every day. I'm glad listeners now know that about you, because I did not know that. That's an interesting addition to your skill set.
Well, it was a great experience when you're 21 years old, going out to a oil rig in the Gulf of Mexico and leading a team of folks. And that's why I try and take two of everything, try and be prepared, because when you're out there, there's not much, don't have a lot of support. You have to make sure that have backups for your backups.
Yeah, I see why you're always very well prepared. So that does explain a few things. Yeah. Okay, great. Well, thank you. I appreciate you taking some time to chat with us and tell us a bit about what's going on. If there are listeners in the Chattanooga area, how can they get in contact with you to participate if they would like to?
The first thing I was going to say is I want to make sure that everybody knows about the Vicinity Partnership. And we just launched the Terran, if you can see that.
Yeah.
So the store right across from this collab workspace, I went into the store today just to see, and the salesperson was wearing a Terran hat. So I figured I had to pick one up. But Terran is our first crowdfunding opportunity in Chattanooga, and we can get people off the sidelines and to support the company, even if it's only buying a hat like this.
Got it. Nice. Good plug. Okay. Thanks, Jay. I appreciate your time today, and we will talk to you again soon.
Well, thanks so much for the opportunity, Paul. I appreciate it.
Welcome back to Venture in the South, podcast about angel investing in the Southeastern United States. On this week's episode, I am joined by Eric. Eric, welcome to the show.
Thanks, Paul. It's glad to be here.
We will give you the chance to introduce yourself to listeners now. Go for it.
Okay, great. I'm Eric Thome. I'm here in Charleston, South Carolina. For the last 9 years, I've been the director for VentureSouth Charleston and helping to run our group here, attract members and educate the community on what we're looking for as far as investors and really startups. And it's been a fantastic excuse to stick my nose in everybody's conversation around entrepreneurship, investing, finance, startups, technology, you name it. And when you start talking about this in a coffee shop, it is interesting the number of people that they'll pause from their laptops and lean over and say, "Hey, I'd like to talk to you about what I'm working on."
Yeah.
So I've had some really fortuitous conversations and opportunities to get involved in some really cool things in the community. My day job during the last year and more has been with Broadtree Partners for a lower middle market private equity firm. And so a lot of my work there is hiring our operating partners. And so they do a lot of the search for us to find the companies we acquire with the idea they step in as CEO of those businesses. It's interesting the parallels and where we diverge in the venture angel space and Broadtree and private equity. And it's been fun, though, fascinating still, just the ways that people create value in the world and make money, and constantly getting to see deals around it is a lot of fun. And the investor appetite around both and each is really interesting. I've got 3 daughters, so my wife and I together, 15, 12, and 5-year-olds. So we're busy between schools and lacrosse practices and poetry recitals and swim lessons, and a lot of fun things around that. Also involved in the community, board chair for the American Red Cross here in the Low Country. So we just had a meeting today, a fantastic board and a great group that does a lot of impactful work in our community and across the world. I'm also chair of a venture philanthropy group that I'd love to talk about more in the parallels between venture philanthropy and angel investing. And that group looks to invest in scale stage nonprofits. So local nonprofits that are trying to increase their impact, and they need money and advice. And so we'll basically do multi-year grants and consulting engagements to help them reach a new level of sustainability outside of our commitment. And it's another great group in the community that's leaning in. And then finally, I'm a volunteer back at my alma mater, Clemson, and our honors college, and on the advisory board, then helping to lead the capital campaign.
Okay. Wow, that was quite a variety of things to cover there in the introduction. So we'll dig into pieces of that along the way. Let's go back to the Clemson. I guess the fact that you covered a lot of ground there suggests you're pretty entrepreneurial. So just run us quickly through kind of your background post Clemson and some of the things you've done in the past.
Yeah. Coming out of Clemson, I had early ideas that I wanted to be an entrepreneur, but I wanted a lot of experience leading up to that. And I had worked in operations and manufacturing for a multinational organization in a rotational development program. So I got to see multiple assignments in multiple locations, doing work in process optimization, manufacturing, supply chain, and forecasting and inventory management. Got into a sales office with that same company. And it's a fantastic education to have a customer tell you what they like or don't like about you, your product, or your customer, or your company. Mm-hmm. And then therein lies opportunity, right? You help solve those things, and you've won someone's trust in business, hopefully. Knew I wanted a larger financial perspective on a lot of the work I was doing, and knew I'd be going back to get an MBA. So I went to the Darden School at the University of Virginia. Had a great experience there, interned in India, and so worked for Infosys in Bangalore, India, doing some work with some incredible people. And then consulted with Booz Allen Hamilton afterwards. And so I was up in New York, and this was on their strategy side. It's now called Strategy and, I believe, part of PricewaterhouseCoopers strategy practice. Doing a lot of operation strategy consulting for manufacturing and distribution firms all over the world. And then Avon Cosmetics, doing global supply chain planning and a lot of work coordinating production and supply around the world. So a lot of my day was on phone calls with Poland, Brazil, China, and I wanted to do it remotely from Charleston and had an opportunity to move to Charleston. I think it blew everyone's mind to say 15 years ago that I wanted to work remotely. I was ahead of the curve there.
You were, yeah.
So eventually they wanted me back in New York, and I declined and wanted to stay in Charleston. And so there was really my push into the entrepreneurial world. I had found some partners and some people that were like-minded, one of which is the founder of Broadtree. And when I was talking about trying to work for a company that was smaller, entrepreneurial, we could make decisions, roll up our sleeves and act on it and see the results right away. I had reconnected with Dave Slenzak. He's like, yeah, I want to buy a small business and I want to be able to make decisions and roll up my sleeves and see the impact of my work right away. And I was like, yes, I want to do this as well. And I want to look for a company that I could be in charge of. And essentially I bought a folding kayak company called Full Boat, and it made skin on frame folding kayaks right here in Charleston. Folding kayaks. So it would come in a bag. There's multiple advantages. It's lightweight. It's very portable. So for people that don't have the space or the strength or just don't want to lug around a big, heavy plastic kayak, this was an opportunity. It's something that, I would take trips and use it as carry-on luggage or check it as luggage and flew with it and would go paddling in cool places around the world. It was also a high-performance kayak. So it had a true hull with this it was like a tent, so space-age aluminum and these DuPont-coated strong fabrics. So it would fold up and the skin would roll up. And with a true hull and keel, you could do some high-performance kayaking in it. Not whitewater kayaking, but other types. The challenge was it was not designed for manufacturing and not designed for a wholesale sort of distribution play. Looking back, if I had raised some money behind it to help redesign the product and the supply chain for that, I think would have given it better chance to be competitive. So as I joke about it now, it was a great opportunity. I learned a lot. It was kind of a flyer of a structure. There's really limited downside to the acquisition. We basically assumed it for nothing. But yeah, I ended up closing it down after 4 years. And I tell people it's a success in all ways except financial. Yeah. Well, and coming out of it, I went to work with a mentor of mine and, to realize how much value I could add in the perspective that I had gained running my own business for 4 years. After having worn every hat, it was really compelling and satisfying. It was also coming out of that as a job that I connected with VentureSouth. And I was like, I really like this entrepreneurial thing and I want to get closer. You want to get closer to it. And remember talking with Matt Dunbar. He's like, yeah, we're looking for more people in the Charleston area. So, yeah, the idea to talk to startups and talk to investors was fantastic. But yeah, my partner and I also, the same year we bought Full Boat, we started a website retailer called GameDayBlazers.com. And we would sell colored sports coats to college sports fans so they could be dressed up for their tailgates.
I see. So you're responsible for a lot of orange blazers around the upstate and a lot of stylishly dressed game days. I like it.
I wish I was more responsible. This being master's time, I actually sold more green blazers over time and around this time of year. And what I would see is groups of guys mostly would have like golf buddy trips and they'd have their own green blazer they'd give out at the end of the trip. For orange, with the suppliers I found, the orange we initially had was too Tennessee orange. And so all my Clemson buddies, they turned their nose up at it. So then I found one and it was a little too Texas orange. It's still too burnt orange. And so again, all the Clemson faithful turned their nose up at it. When I tried to explain to them this is a fashion item, they know you're not pulling for Wake Forest, you're wearing something orange. So then I went and I sourced the Clemson orange in the right fabric. I got it approved by Clemson marketing. These are the Pantone colors. And I made a very bright orange blazer. And there's a reason why the athletes on the field wear it. They stand out. When you wear it in a restaurant, I'm not going to say clownish, but again, Clemson people said, oh my God, it's too orange. So it's like, I give up. I can't satisfy
Can't win.
Clemson fans with orange.
Well, you sound like you tested that market thoroughly, so I'm glad, I'm glad you.
I'll test it and pivot it, do a lot of experiments, and try the design along the way. Yeah, but it's been fun having those experiences, because now talking to startups and talking to entrepreneurs to know that I've lived with the fun and the challenges and the stress of making payroll and making sure the bills go out on time and dealing with customers, dealing with employees. It's real, right? And it's a fantastic, fun challenge, but it can be overwhelming and stressing, and you got to find your support and help. I found that I had no lack of people to give me advice. And I sort of started to turn off in my ears when people say, you know what you should do is? Because then it would be whatever they wanted to say. And I started to find some advisors that would ask me questions about the business. And they were looking at it in ways that I was not looking at it. And so when someone would ask me that type of question, then I'd start taking notes and follow up and say, all right, can we get together for coffee? I need to ask more. So turning in those people into some advisors was great. And I try to take that same approach with any sort of startup or business I'm talking to now, whether it's a client I've had with some of the consulting I've done, or even a operating company that we might look at with Broadtree now, or thinking about it from an investment perspective. It's like, can we ask better questions? And if we can, then let's keep moving it forward. If it's just, hey, do more Google ads, that's not necessarily the solution.
Okay, got it. That's quite a variety of activities you've already got us through, but I want to talk a bit more about the work you currently do. So give us the quick overview of what that involves and what you get out of it.
Yeah. So for me getting into this, said Dave Slunzak, really kind of helped get me into the idea of purchasing a small business. And he had done a great job 13, 14 years ago, building a great machine to reach out to business owners and their intermediaries, the bankers, the lawyers, the accountants that know these businesses, to generate deal flow and keeping track of it, and building a cohort of people that were doing it together to talk about it. And it worked for him. So it was almost this shame to, how do you turn off this machine, because he had to move into his acquisition. So I kept the brand going at that point, and that was Longleaf Capital. And I became the brand of Longleaf Capital. And, as Dave then came out of his acquisition successfully and wanted to do more of this, he created Broadtree. And so we have that machine and turned it back on plus some. And so it's the CRM with hundreds of thousands of contact information for business owners, their intermediaries, thousands of banker and broker contacts, and the private equity team, the equity supporters, the banking relationships. And we utilize operating partners, and they come in, they are our future CEOs. They come in and lead origination for the private equity firm. And so we're looking for, our website says 1 to 10 million in EBITDA and earnings of the business around the US. They're typically service businesses, a lot of B2B and a lot of different industries. But really our sweet spot is probably between 3 to 7 million of earnings. And they're founder-led businesses too, right? Someone that was solving a need for them or their community, built a business around it 20, 30 years in, and they aren't passing it on to their children or need some other sort of exit opportunity and transition out of it. And we come in to help do that. The typical playbook is, we have the operating partner, they'll become the CEO. They're working to build that relationship day one with the seller. A lot of times we're finding that deal directly. So probably 2/3 of the cases, it's a proprietary deal. It's not a banker or a broker sending it to everyone. We're helping to generate that, and then helping to cultivate that relationship through a heavy due diligence process, and try to introduce them to some of the service providers that will help on both sides of the negotiation to get a great deal in. That seller stays involved, again, for probably 2/3 of the cases in some form or fashion, probably rolling over some equity and staying involved, being an advisor, in some cases staying on the team in a full-time role. And in some cases, they may know the strategy of what would take to grow the business, but just in their entrepreneurial journey, they're not reinvesting into the company in the same way they had been 20 years ago. And so it changes some of the dynamics to infuse the company with new executive energy, private equity resources, and other capital sources. And we'll do leverage buyouts. So we'll add in bank debt to help finance the deal. typically not overburden these companies. Again, as these are founder-led companies, a lot of cases, many of them have been bootstrapped from the beginning and may have never taken any debt. So we're not trying to overburden the company with interest and principal payments every month. We'll come in on growth scenarios and to grow the business and eventually have another exit to a strategic acquirer or a larger private equity firm.
Okay, that's interesting. So obviously there's a lot of talk about entrepreneurship through acquisition and lots of newly minted MBAs going out and trying to buy HVAC companies with varying levels of success. Sounds like you're taking some of the good bits of that, eliminating perhaps some of the uncertainty and the indiscipline of that, and kind of institutionalizing or systematizing that a bit more than you might read on Twitter. Is that a fair characterization of what you're trying to do?
I think it is, right? We are adding structure. We do have that, right? We've got the technology and the contacts. We have the resources with private equity professionals. These are deal professionals coming from investment banking and buy side situations that know how to structure deals and work through them. The capital resources to have done it often, right? We've had 14 platform acquisitions in the last 8 years, 31 total acquisitions. So we will do add-ons later, but we still maintain that relationship that is so critical, that working with the seller, and especially if you're cultivating the deal, approaching someone to say, hey, would you be interested in selling your business? There's a high chance that this person's never thought about what are they going to do the day after they sell their business, right? If they had, they would have gone through and already hired the bankers and done the other work. And so, not to be glib that we're playing armchair psychologists, but we do like to think about, like, what does it help to get this seller through the transaction and think about afterwards, and some of that think about their legacy for what they've built with the company, and to introduce that one person, like with the operating partner on day one, and know this is going to be the CEO, this is who you grow to know and to trust, this is who you're building a relationship with, really helps have that. So we kind of play both sides of that coin, is that we're a person and a relationship, and we're also an institution, and we've done this before.
Yeah, no, that's a nice recipe for getting over the challenges of getting the transaction done. And people are very reticent to give up the thing they've worked on for 20 years to somebody they don't trust. But then on the other side, having the entrepreneurialism and commitment to go give a company a new fresh lease on life or next growth phase. That's interesting to be able to combine those two. So that's pretty cool.
Yeah. We've had some good success being creative at a structured process, and we really try to live through that, talk about our culture and top of the list is entrepreneurial. And we recognize that's sort of the double-edged sword, right? It means that if there's a challenge or a problem, no one has to wait for permission to go tackle that. But it also means there's not a playbook and there's not resources sitting around waiting for that. And for the right personality, that's great. Like, just go get to work and knock down walls. For others, and we found, and you may recognize people like this coming from the banking industry or finance, they want to see things fitting in neat little boxes. And so it's just, throughout our staff and our approach, it's a special fit for someone that wants to come in and do finance deals and be very creative about it.
Yeah. I'm also slightly amazed that there are companies out there that make $3 million in earnings in a year. So tell me about how you reconcile your angel investing activity, where that is unusual, with operating businesses. How do you shift between true startups and established businesses and keep your head from not exploding?
Right. I think there's some investors that they know their lane and that's where they're going to invest and stay in. Not picking on anybody or judging, but some of our real estate investing friends and some people I know in Charleston, the area, they're in real estate. They're going to do real estate. They're going to do maybe 2 different types of real estate deals, but that's what they're going to do. And so to introduce an operating company or a startup, it's just too different. For me, getting into angel investing and looking at profitable companies, for a lot of the people I know in the space, it's the curiosity sort of factor. Like, again, it's just so interesting, all the different work that people do. And there is really deep due diligence, and the spreadsheets and the legal docs, those things have to be there, and you have to work those out, knowing these are forecasts and these are imperfect assessments. And it still comes back to how much you really build relationships with those teams and the people involved. How well a company takes care of their employees, how well they take care of their customers. Is employee satisfaction going up? Is customer satisfaction going up? Those 2 things are going well for a business, and they're maintaining and growing in profitability. There's a lot of good work you can do with that business. So we're not doing turnaround situations and trying to save things at Broadtree, but jumping back and forth. Yeah, it's still a lot about those teams, what drives them, and then, what are sort of the processes and metrics around them that leads them towards those goals to help make sure that you're aligned with that and can help measure success.
Yeah, right. I was being a bit glib in my question. There's a lot of commonality between businesses of all ages and sizes, and one of the main commonalities is they are all people at the bottom of it. So you've got to figure that.
Yeah. I tell you what's not, banks aren't people. So once you take a loan on a business, right? That was a big thing. Like in Angel, you're building a portfolio knowing there's going to be losers in the portfolio, and the return potential on any one has to outweigh those. But when you borrow money and from a bank on a deal, even if it fails and goes to zero, the bank is still calling you for that money.
Mm-hmm. Yeah,
so
right.
It changes the risk dynamic, and so it changes the investment appetite and the portfolio approach.
Sure, absolutely. So you said earlier on that you'd now been involved in the VentureSouth Angel Group in Charleston for 9 years. It's hard to believe that time has gone by so quickly. Casting back a while, so why did you get involved in that in the first place, other than Matt's very persuasive about engaging with Clemson alumni? Why did you decide to get involved in that?
Yeah, well, the Matt factor was not to be ignored. Yeah, right. Matt and I were friends at Clemson, and I long held a lot of respect and admiration for him. Appreciate him as a friend and colleague, and really loved what he and you and Charlie have built with VentureSouth, and that seeing a need for this in our larger community to have something that is so interesting, so potential for complexity, that was really a pretty transparent process, right? And it's this difference in sort of simple and easy, right? It's a pretty simple process. It's not easy, but it's like you can really lay out what we're looking for and what VentureSouth is looking for to invest in, and you can communicate back on that. So you can tell the local bakery you're not really a fit for VentureSouth, and you can tell the $3 million EBITDA company that's looking to do an LBO you're not a fit. But you could tell the startup company that is trying to create an MVP and get out there and win over their first 20 clients, you could be. So why don't you, continue to stay in touch? And when you can show us your track record and you really hit some traction here, we'd love to talk to you more. You don't need to raise maybe $5 million a day, but go for your friends and family around. And when you're ready for that, maybe close to $1 million or more, come back to us. And then, you build relationships along the way with that. And it helps for a lot of feedback for not just the startups, the community around startups, and then certainly for the investors to know where their money's going, what it's towards. They can see the pipeline of deals and understand what's going on. And so it's proven to have gotten a lot of money off the sidelines in South Carolina that I think wouldn't have been invested into these companies that are having a chance to do really impactful work. And I think I'm going to steal this. I've overheard someone was talking about community leaders from Greenville, talking about revitalizing and adding to the community and the economy there 20, 25 years ago. Talking about they wanted a place where their children and grandchildren would have jobs and be able to work. And I really think about that way now too, and think about the next generation of what type of work will be out there and how do we cultivate that so that all the people, these girls I love in my home that can go to college and work in our area doing jobs that may not exist yet, right? Industries that may not exist yet, and roles that are just now, we're dreaming about. So let's be part of helping to build that new economy.
The way you phrase that, Eric, is really telling. So you are the optimist there. You're preparing the girls for jobs that don't exist yet. Everybody's conversation at the moment is all the jobs are going away because of something. But your attitude, I think, is like mine. Is like they may well be, some jobs going away, but the excitement is there's going to be all kinds of jobs that nobody has any inkling of what they even might involve yet because of the things that people come up with. And I think that's perhaps why you've stuck around being an angel investor or being involved for 9 years, because that fundamentally is the way you approach things, which I think is really, really cool and an impressive thing to show in a 2-sentence answer there. So I'm very impressed with that.
Oh, I appreciate that. Well, that's a cool thing that I appreciate about the network of investors, because there'll be deals that are way over my head. They're talking about technology that I don't understand. I've never heard of it before that pitch, and the company's talking about it. And then I'll nudge somebody. It's like, how are we going to diligence this? And they'll say, oh, I've been looking into this for 15 years. And I've got friends that are PhDs, and like all of a sudden, like here's this person that knows it. And it's not like we planned it, but you just get enough interesting and the right people around the table. And anecdotally, it's like it happens over and over again. You're like, oh, I know who to call. I know what the hurdles are. I know how to help. You're like, great, let's get you on the diligence team and maybe on the board for this company. And it adds tons of value. And then you're making those connections with, like, the startup needs that. So one of the things I definitely do when we see pitches is I'll look for that person that asks the question that the CEO really perks up, and they write the note like, ooh, this person in the crowd just asked something that really added value to that CEO. Like, I need to go ask that person, what they know.
Yeah, it's good when you have experts in the room together that don't know that, which one is the expert. It's also great to have just a lot of curious people in the room. Back to what you said earlier about curiosity, just having lots of people asking questions in a room creates interesting stuff.
Entirely. Yeah, I think
Yeah.
diversity of perspective adds a lot to the investment decision.
So tell us a bit more about your venture philanthropy work and how that is the same or different from what we've talked about.
Yeah. So this group is called Empower Charleston. It used to be Social Venture Partners Charleston. I'm part of a larger network of venture philanthropy groups. We rebranded last year. And it looks for local nonprofits that are at this sort of scale stage. And they are sustainable. So this isn't someone's night and weekend project or passion project that they don't have a budget around. This has a true budget, a true board, it has staff, not necessarily a global multinational group, and they have desires to change and move to this next level. But for whatever reasons, most of it being just limitations on time and resources, they don't know how to get there. And so Empower Charleston is a group right now, 40 to 50 local typical business leaders of different varieties, different ages, different industries and occupations that all come together, and we run a grant process. So I've been the investment chair for that group over a number of years before becoming the board chair, and look to structure the deal of the investment process much like we do at VentureSouth. And how do we build a rubric, and how do we assess risk, and how do we assess opportunity? So much of it does come around to the team and their desire for change, and what will they do with additional resources. Because for us, we're happy if there's groups that simply they need more funding, right? They're going to take money and do more of what they normally do with it. We are looking for leaders that will look for some sort of transformational change in that. And so we talk about in VentureSouth the sort of coachability factor for CEOs all the time. We want them to be experts and to be strong-willed people. We also want them to be coachable and to learn from good advice. Similarly, with venture philanthropy, and some of the best investments we've had are leaders that are very hungry for change and take great advice, use the engagements that we build to help transform their boards and the organizations, the relationships between them and the staff and the community, and build out a lot more of what they do. A nice success story is a group called Charleston Hope, and a young leader there, Emily, who was ready for that. And then really with what they had been doing, had been able to expand now multiple school locations. They do a lot of social emotional learning for young children at Title I schools. They're now in many more schools, larger programming, larger staff, and they've really just taken the advice and run with it. And it's been really gratifying to see.
So the grants that your organization is administering, that money comes from the individual philanthropists or from another pot of capital somewhere?
Right. So currently we all pool our capital, and that becomes our grants funding. We've started hosting community showcases where we show off the investment process and then the organizations that we're investing in. And that has changed over time. And we used to have sort of a pitching competition, very popular in the startup space, and we did that in the nonprofit space. And what's tough is you have winners and losers out of that if you do it all in the one sort of night. And it doesn't feel very good, especially in the nonprofit space, to say, great, thank you so much for helping our community, but you don't win. Yeah. So we really did the work and then created a community showcase to celebrate all of them that we're presenting and celebrate what they are doing. Even though a lot of them are working on some really tough and heartfelt issues, we're celebrating them and work they do. And with that, we'll bring in other community partners and sell tickets and trying to cultivate other relationships for people that are looking to make philanthropic investments in our community. And for us to say, well, we've done diligence on these, and we can tell you why we think they are investments and worthy of your time and money. And so we have started to see additional capital come in to those organizations through that. And I can imagine that will become even larger in the future.
Okay, that's very cool. So if somebody is interested in joining the angel side, obviously they join VentureSouth at VentureSouth.vc. If they're interested in the empower side, how do they get in touch with you or that organization to make more investments or be the recipient potentially of some of the grants?
Yeah, definitely. We'd love to see more. Empowercharleston.org is our website. And they
Okay,
can find
pretty
more
easy.
information there to get involved.
Yeah.
Involved.
Okay, cool. Well, Eric, I think we should have another show picking apart one of those subjects that we covered, but that was really impressive. Variety of things you're involved in. I don't know how you have time to do all that and raise 3 girls and do everything else you do, but I hope you can keep doing that for a long time.
Me too. It's a lot of fun, and I find it to be really rewarding. And, I love making connections between groups or people that have needs and then those that have resources. And so whether I'm doing that with companies or nonprofits or individuals, I find it really rewarding. So look forward to more connections and more opportunities.
Okay, great. Thanks, Eric. I appreciate you taking some time to tell us about that on the show, and hope people contact you to follow up.
Great. Thanks, Paul. Enjoyed it.
Thank you for listening. Visit us at ventureinthesouth.com for a complete list of previous and future shows.